As the cryptocurrency industry continues its rapid evolution, recent developments highlight a shift towards mainstream adoption, increased regulation, and institutional involvement. Notably, BitGo, a leading crypto custody provider managing over $90 billion in digital assets, has filed for an initial public offering in the United States. This move signals growing confidence in blockchain infrastructure and the increasing role of traditional financial markets in crypto asset management. Meanwhile, the influence of U.S. monetary policy on the crypto market remains a hot topic. Leading economists warn that the Federal Reserve's aggressive rate adjustments might catalyze a significant surge in crypto prices. Timothy Peterson, a prominent economist, highlights that markets underestimate the possibility of rapid rate cuts, which could trigger substantial volatility. As the Fed signals potential easing, traders anticipate a possible buy the rumor, sell the news scenario, with Bitcoin and other assets possibly consolidating before further upward moves. In the aftermath of the Fed's recent 25 basis point rate cut, Bitcoin's reserve dynamics are also shifting. Data indicates a decline in Bitcoin exchange supply ratios, suggesting that investors are withdrawing BTC from exchanges in anticipation of future gains. This supply crunch could push Bitcoin towards the $120,000 mark if liquidity continues to flow out, reinforced by increased institutional interest and ETF inflows. Institutional giants are making strategic moves. BlackRock has purchased approximately $390 million worth of Bitcoin and Ethereum, further cementing the role of traditional finance players in crypto markets. Concurrently, large asset managers such as Tom Lee's BitMine have added million worth of ETH to their holdings, now amounting to nearly $8.66 billion, underscoring the institutional pivot. On the regulation front, global authorities are making bold strides. The Canadian RCMP seized $40 million worth of crypto from an unlicensed exchange, and the U.S. SEC Chairman Gary Gensler recently defended enforcement actions, emphasizing that most tokens lack clear fundamentals, apart from Bitcoin. Furthermore, the U.S. SEC is considering new simplified ETF listing standards, which could accelerate approval processes for crypto ETFs, promising increased market liquidity and retail participation. Meanwhile, new legislative initiatives and technological integrations are shaping the ecosystem. The U.S. Treasury has been tasked with drafting a strategic Bitcoin reserve and a digital asset stockpile plan, signaling potential federal involvement in asset management. Simultaneously, projects like Enesis are pioneering XRP-backed stablecoins, bringing XRP into DeFi for the first time, and Kraken has partnered with Trust Wallet to facilitate tokenized stocks, broadening retail access despite regulatory hurdles. In sum, sovereign and institutional interest in cryptocurrencies continues to grow.